Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com comments on silver's 31-month low, the big pop in marijuana stocks, and the latest from the markets. Marc Faber, editor and publisher of the Gloom, Boom, and Doom report, points out only a couple of high-flying stocks are keeping the U.S. stock market afloat. He warns that tariff wars could have a heavy impact on the world's economy. The Corbett report's James Corbett talks to us from Japan. He tells us about India's rapidly growing economy and how China is the world's biggest miner of cryptocurrencies. Plus, at the end of the show, we'll have company showcase updates from American Manganese President Larry Reaugh and Cypress Development's Don Mosher. We'll talk to Ross Clark right after this.
AMY.V Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, AMY.V's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abnresources.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. Welcome back to This Week in Money, Ross.
Nice to be back with you, Jim.
Silver hit a 31-month low. What's happening with that precious metal?
Well, that metal, along with most of the industrial commodities, took a pretty good hit in the first part of the week. And take a look at the copper price, down and dirty. The silver, say, you go over into the other base metals, hits over there as well. But as far as these items are concerned, really it was the movement in the U.S. dollar that really was a bit of a catalyst at the early part of the week. Dollar had a pretty good bounce into the midweek, and that's where you got that hit as far as the commodities were concerned. Now, what I like here is that silver historically doesn't create quiet bottoms. Silver tends to see real panics into the bottoms and then come around and test it shortly thereafter. So what we have both in the silver price, this good hit of this week, we closed around 1420, is some sequential signals that don't come along very often. Sequential 13, and the bottom line on that is that within the next 10 days, we should see an upside reversal back towards some bit of resistance, then likely come back down to retest the low. We also, when we take a look at the relationship between silver and gold, the weekly relative strength index on that ratio is at an extreme, something we don't see very often. And on my work, where I use my capitulation and exhaustion models, I have capitulation on the silver-gold ratio. The first time that we've seen it in a couple of years, and matter of fact, in my history going back to the 1970s on the history bank, the database that I have, I only see 3 examples of this. So this type of extreme would say that we're basically taking care of the vertical decline as far as the silver price is concerned, where the real panic phase sets in, and that when we come around to do the retest, we'll be looking for a bit of, some kind of a small basing action and reversal. Probably the whole process is going to take us out until October, maybe November, but there's a pretty good chance that we're going to be looking at an important bottom here as far as not just silver is concerned, but also the gold market as we move from where we are right now through the next month and a half.
Gold miners or gold bullion? What's going to pull us out first?
Well, what you like to see is the miners putting in a bullish bottom relative to the bullion once you hit the bottom. And if you take a look at the big names right now, you don't have any of that. You've got the GDX, the GDXJ, both finishing off the week very badly, new lows for the moves, but oversold enough on both the daily and weeklies that they're set up for a pretty good bounce. If we look at something like the GDX, the larger miners there, closed off the week around 1790. Probably good for a bounce up to, I would say, 19 and change, as part of maybe this downtrend that we're in. A little bit of a relief rally on that one. We did a full report on Newmont a few weeks ago showing how it likes to bottom out. And it's usually a basing process that takes the better part of 6 to 8 weeks. We have a very significant signal there as of Wednesday. We've got downside capitulation in Newmont, and that usually is a precursor to this rounding out basing process starting. So probably not looking at the lows as far as the miners are concerned. However, we've got this type of thing that we would expect to see at the tail end of that vertical decline. So I'm really sort of looking forward here to what this process from here through the end of the year should provide us with some pretty good opportunities.
Are we going to have a traditional slide off in the price of crude this year? Last year we didn't see that, but will we see it this year?
I believe we're set up for it. If we take a look at the price action this year, you had that first run to about 66. You had a second, that was the early part of the year. Then we made marginally higher highs as we moved through the spring. You had a $70 high, sold off from that, a 72, and then a 75. And the whole sort of upward flag style of pattern here started to show some weakness as we moved into the middle of August. It broke its support line, and it just had a 66% retracement rally from 75 down to 64, retraced back to 71-ish. Now, that style, that whole upward flag and the beginning of this rolling process is exactly what we saw in copper about 2 months ago, when it was having trouble around the $3 mark. It had that one last spike up on the strike situation in Chile. And as we know, that was very brief, lasted a few days, and then copper prices started to break down. So the crude oil has got the same style of distribution pattern that we saw in copper. And I would think here we're just under $68 right now as far as the oil price is concerned. If you get a close through 66, clearly I think you're looking at numbers that are going to be down into at least the high 50s. Probably 58 would be the first targeted support area, but I would think worse than that. And we have this other cycle that I've looked at historically. 10-year cycles in the oil market in the latter part of the 8th year of a decade. Crude oil has historically just had a fair amount of pressure. And so we're coming up on that. From my perspective, all we need here is a catalyst to give us the break. So $66, I think, is the number you want to keep in mind. And if you look at the oil stocks, take a look at the XLE and the other ETFs. They're all looking pretty heavy and slowly stair-stepping down. Nothing really excessive on the downside. So they've got room to go.
Ross, marijuana stocks still making headlines. Any big movement out there?
Well, they're making headlines because they're putting new contracts together, and with majors and big dollar volumes coming together as far as various agreements are concerned. And price action has just been explosive on the upside in a number of these stocks. We have updated the research that we've done previously on Canopy, and do have that available so that if anybody wants to send us a request, we'll send them out the latest on our analysis for Canopy growth.
Ross, thank you so much for chatting with us.
More than welcome, Jim.
My guest has been Ross Clark from chartsandmarkets.com. Coming up, Marc Faber, editor and publisher of the Gloom, Boom, and Doom Report. Next on This Week in Money.
Always consult your investment professional before making any investment decision.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and planned for Canada this summer. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Marc Faber, editor and publisher of the Gloom, Boom, and Doom Report online at gloomboomdoom.com. He's speaking to us from Chiang Mai, Thailand. Marc, welcome back to This Week in Money.
Well, thank you very much for having me on your program.
Marc, at a Thursday evening rally, President Trump mentioned he has fixed Frank Dodd-Frank. Have you heard anything about that?
No, I haven't heard about it.
What could or should be done to fix it?
Well, there are so many ways to fix policies and ill-conceived policies. I think in general, I would say that regulation has rather failed, largely in the financial sector because of money printing by the Federal Reserve. And so the money flowed somewhere and created excesses, and that has again been the case now in the last 2 years. I mean, I just read a piece about Tesla that they priced bonds, I think it was about a year ago, 1.8 billion, at essentially ultra-low interest rates, given that the company has never made any money. And now the bonds have adjusted on the downside, and they're trading around 82, 83, and are yielding around over 8%. And the writer, he said that he's never heard before of essentially a company like Tesla that has still a $40 billion market capitalization and has bonds yielding 8.5%. Normally, 8.5% in the corporate sector is a junk bond, and then the equity is much lower than $40 billion.
Does the Dow look like it will hit new highs this year?
Well, from the beginning of the year, I have argued that the market's high was essentially on January 26, 2018. The S&P high was at the time 2,872. And some indices have exceeded this high more recently, including the S&P. But the S&P today is again precisely at that high. And other indices have not reached new highs, including the Dow Jones and the New York Stock Exchange Index. So in technical terms, we call the January high most likely to be the orthodox top. The orthodox top of a market is the top of the market at which the majority of stocks reach a new high, a 12-month new high. And if you look at the last, say, 3 months, the number of new highs on the New York Stock Exchange has been shrinking. And in the last few days, as the market made new highs, there were essentially just two stocks that made new highs. They were Apple and Amazon. You understand? So an index does not reflect very well what the typical stock is doing. As an example, I just give you Facebook, which was one of the FANG stocks, the famous FAANG stocks. Facebook is 25% down from its high. Netflix is down 17% from the high. Micron Technology, a semiconductor company, is down 30% from the high. GM is down 25% from its high. The building stocks, the home builders, they're all down around 25 to 30% from the highs. Some of these highs occurred actually already a year ago. In other words, in 2017, not in 2018. So you can see that within the market, there was underlying weakness, which has been hidden by a few stocks that were very strong. These few stocks were the FANG stocks, semiconductors, and a few others like Tesla. Tesla recently made a new high in July. It's now down probably about 30% from that high.
Do junior stocks enjoy a bull market towards the end of a stock market cycle?
What do you mean by junior stocks?
The Russell 2000.
Okay, the Russell 2000, every bull market is slightly different. The ones I lived through were the bull market from 72 to 73. In other words, the market had rallied in the 1950s and 1960s. Then we had in 1970 a bear market, and then it recovered, and then we went to a new high in January 1973. That high was achieved by around 20 to 30 so-called quality growth stocks: Xerox, Kodak, Polaroid, Boros, digital equipment, and so forth. And the secondary stocks did not make a new high, and after that high, in January 73, the market went down, rallied into October, but the majority of stocks did not make a new high, nor did the market make a new high, and then we went down into December 74. At the low, we were down over 45%. A second big bull market I experienced in the late 70s, that was a bull market mostly in energy-related and mining companies. And the rest of the market was sleeping. And when the market peaked out, the rest didn't make a new high, but the AMY.V index, which was heavily weighted by a few energy stocks, went up another 6 months. And then we had the bull market. I mean, I'm not going to repeat every bull market I've been through, but the bull market in 2000, the Nasdaq peaked out in March 2000, and then it went down. But some stocks went up until October 2000, and the market almost reached a new high in October 2000, but it didn't make a new high. So what I want to say is, you have in a market, like in the commodities market, you have a lot of different sectors, and you have a lot of different indices. And at the beginning of the bear market, usually investors remain bullish. In other words, they don't realize that the bear market has begun, otherwise they would be selling. So what happens is they sell, say, Facebook, but they buy Apple, or they sell Netflix and they buy Google, or they sell Netflix and they may buy the Russell 2000, as you just said, your smaller companies, and so forth. So the money flows from one sector to another, and not every sector makes a new high and new low at the same time. As I said, this year, the Dow hasn't made a new high, but the Russell 2000 has made a new high, and the Nasdaq 100 and the Nasdaq have made new highs recently, and so forth. So the top, or let's say what I consider to be a top formation, can extend for quite some time.
Are you bullish on any junior market sectors?
You mean in the stock market?
Yes.
Well, some people, they are very keen on wheat stocks. Some people on all kinds of new technologies and so forth. I tend to stay away, and I know in some cases it may be a mistake not to invest in some of these new technologies, but my experience has been, like in mining, for one big winner in a new technology that doesn't go bust then, or is eliminated through competition, you have essentially 90% of the competitors failing. In other words, if you buy mining stocks in a mining boom, at the end of the day, 95% will be bust. And the same when you buy new technologies like the technology bubble in 2000, a lot of stocks subsequently failed and never recovered. Lots of stocks that made their highs, technology stocks, in year 2000, they haven't recovered to those levels yet.
We'll have more with Marc Faber next on This Week in Money.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Marc Faber. Marc, do you see a stronger or weaker U.S. dollar ahead?
Well, as of today, the dollar is still strong. It's actually strengthened this morning. But quite frankly, when I look at Mr. Trump and his policies, and when I consider my own economic outlook, and my economic outlook on the U.S. is not very favorable. I think the U.S., the economy, despite on the surface you see strength, but beneath the surface you see some weakness, say in housing and in the automobile industry. These are important industries for the U.S. And wages, yes, today they picked up a little bit, but not dramatically. So overall, I think the economy is actually not as strong as is perceived, and therefore my inclination would be to think that once the Fed realizes, and they're not going to realize it right away, but once they realize that the economy is not that strong, they're going to refrain from further rate increases, and once the economy slows down and goes into recession, they're going to cut rates.
Do you believe they've been raising rates just so they would have the ability to cut later?
I think they should raise rates and not cut them later. There are so many excesses in the markets. We are again in a bubble this time, unlike 2007. It's not just a stock market bubble. It's a gigantic credit bubble worldwide. And we have bubbles in bonds. I mean, please explain to me, how is it that German bonds, 10-year government bonds, yield 0.38%, or Italian bonds, they yield 3%, but U.S. bonds, the 10 years yields 2.93, so it's almost equal. Or Portuguese bonds, they yield 1.88%. Portuguese bonds yield much less than U.S. government bonds. Spanish bonds yield 1.45%. I mean, the market is completely mispriced. Swiss bonds have a negative yield. Japanese bonds have a yield essentially zero. So this is a gigantic bubble that will have to be deflated at some point. Then we have the pension fund problem that we didn't have we had it in 2007, but not to the same extent. And then we have other assets that are in a bubble. I mean, recently I saw some charts about the housing market in the US. Some home markets are at about the same level than at the peak in 2007, and some maybe even a bit lower. But a lot of housing markets, Denver, Seattle, San Francisco, Los Angeles, Boston, they're much higher than in 2007. The commercial real estate market is also kind of a bubble. So when I look at all this, I say to myself, the policies that were implemented post-2008 crisis have actually added or built another bubble on top of the 2007 bubble.
Do you think the Fed is going to continue to hike interest rates?
Well, I think the political pressure will soon arise where they will find it difficult to increase rates a lot. But maybe, I mean, based on the latest figures, I think we'll get for sure another 1 or 2 interest rate increases. But as I said, I think the economy is actually slowing down. And believe me, if I look at the currencies of Turkey, Argentina, Mexico, Brazil, South Africa, all these countries, they signal that the economy has a problem. When so many countries have a problem, it would be most unusual that the U.S. has no problem whatsoever.
Are those currencies in danger of collapsing, and could that spread to the rest of the planet?
Well, it's a nice question. They have already collapsed. So if you ask me, will they collapse further? Well, in general, I think these countries have poor fiscal discipline and a poor history of repaying their debt, and it is likely that over time the currencies will weaken further. But I'd also like to say, I think that over time it's also likely that the US dollar will weaken further. Now the question is, you will turn around and tell me, well, Mark, if the U.S. weakens, the euro is not much better. It's probably even a fundamentally more flawed currency than the U.S. dollar. So, and the other countries around the world, they don't want to have strong currencies because then the export prowess or the export capacity diminishes. So, which currency will be strong? And then that is the big issue. Some people say, well, if the dollar weakens, what will strengthen our cryptocurrencies? And some other people say, well, it will be gold, silver, and platinum. I'm leaning towards the gold, silver, and platinum view, but maybe some cryptocurrencies will also be strong. I'm not involved in cryptos. I think most of them will go bust, but some will probably survive, and the blockchain technology is probably here to stay. But I don't understand enough to make a prediction about whether they'll go up or down. But in general, so many were started by essentially catch penny schemes that they will obviously be out of business.
Are banks around the world constricting credit?
Well, the banks around the world, some have been more careful about extending credit. Some can't because they're almost bust. And in some countries, credit growth has been very strong. But in most countries, it's been slowing down lately. So if you look at 2007 and 2018, and you take credit as a percent of the economy in, say, a country like China, then it's gone up as a percent of the economy by more than 50%. It's also gone up in the U.S., by the way.
What effect would constricting credit likely have on real estate and consumer debt?
Well, I think this is, again, an issue that occupies the minds of many investors. Because some people say, well, the money printing and so forth, will inevitably lead to inflation and high inflation, and that may be the case. But we are in a situation where globally asset prices have already experienced very high inflation rates. In other words, if you look at Vancouver properties, where they were 20 years ago and where they are today, nobody can tell me that there wasn't any high inflation in Vancouver property prices. Ditto for Toronto and so forth. So we had already huge inflation. We also had huge inflation in stock prices. And since bonds have rallied for such a long time, I can also say that bond prices are inflated. And when the credit flows slow down, and I have to say that international reserve growth in the world has been slowing down. When this happens, there is discomfort in financial markets. And as the credit grows around the world, in other words, the build-up of international reserves slowed down. It didn't contract, it slowed down. We had problems, as you know, in Turkey and in Argentina, Brazil, Mexico, South Africa, and to some extent also in Indonesia, but not so much. And also in India, we have some currency-related issues, but not that much. But basically, we had these problems, and whether they will spread, who knows? But obviously, if these countries default on their obligations, a lot of these bonds are held by investors in Europe and in the US, and these investors will obviously suffer losses, and as a result of these losses, they have less money and may have to sell other assets. So you can have essentially a vicious circle on the downside.
Are most real estate markets around the world in or about to enter bear markets?
I think they're very high, and some, in my opinion, have already entered bear markets. I think the market in Toronto is already down, maybe around 10% or so from the high. And some markets like New York are already down. Also London. Are they going to go down and collapse? As I said, I think once the Fed realizes that the economy weakens, then it will stop increasing rates, and it may start to cut rates again.
We'll have more with Marc Faber next on This Week in Money.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange symbol CYP, the Pink's CYP.V, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking to Marc Faber in Thailand. Marc, do gold and silver need a trigger to move higher in U.S. dollar terms?
Not necessarily. I think if you look at gold and silver and platinum, they have essentially performed horribly. They have disappointed investors, and as they didn't go up, the speculators have liquidated them, and also a lot of speculators that usually run into these investments for speculative purposes, they abandoned their gold and silver market and traded cryptocurrencies. So there is a general neglect or a complete neglect of gold and silver, except among a few hard die bulls, gold bugs and silver bugs. My sense is that when the asset inflation comes to an end and financial asset prices decline, and when it becomes obvious that actually all paper currencies are not particularly desirable, whether it's the euro or the US dollar or the Canadian dollar or the Australian dollar. I think once people realize that, there will be more interest in precious metals.
Do you see gold and silver going higher or lower from here?
Well, I think that gold and silver will be higher in a year's time, and will be higher in 2 years' time, and will be higher in 3 years' time. I'm not making a prediction that gold will go to 5,000 or 10,000. It could happen, but I think it will go higher simply because investors, if you ask me, Mark, here you have $1 million and you can choose a currency or several currencies. Which currency would you choose? I have the bulk of my liquidity in US dollars, but I don't feel comfortable with the US dollar. I'm happy to have it because it went up, and so the decline in gold prices hasn't hurt me very much. But in general, I think that I don't want to own dollars in the long run. At the same time, I don't want to own euros in the long run. Then for me, the alternatives are the Australian dollar, Canadian dollar, British pound, Singapore dollar, and some Asian currencies and so on. So I asked myself, well, you know, for liquidity purposes, I think maybe the best for me is to own precious metals.
Is oil likely to remain in a trading range?
This is a controversial issue. You have the super bulls on oil, and they think that war is coming and that oil will go to $150, $200. That is a possibility. I'm not saying it's not possible, but if we just talk about economics and disregard for the time being politics, and we neglect that a war could happen, a global war, World War III. In that case, I think that given my outlook for slower growth and the recession around the world, don't forget the current expansion is now essentially 9 years old. This is the longest expansion we had in the U.S. ever. It's also the longest bull market we ever had. Anyway, with my outlook, I think the demand for oil will actually weaken. So I would rather think that oil will decline.
What else are you watching in the commodity markets?
Well, of course, I'm watching industrial commodities, nickel, aluminum, copper, the crude oil. I'm also watching the softs, coffee, cocoa, sugar, and the grains. And I have to say, when I look at the commodities, especially in the industrial commodities, I don't get the feeling that there is a lot of inflation around the corner. You know, copper has been surprisingly weak, despite all the analysts telling you that it's going to go up. And also nickel has weakened, and lumber has also been weak lately. So it rather tells you that demand is not very strong.
The U.S. and Mexico have agreed to a trade deal. Canada is negotiating with the U.S. to be part of that deal. Originally, President Trump offered real free trade, no tariffs, no barriers, no subsidies. Should Canada push for that original free trade offer?
Well, the U.S. has never really had free trade and an open economy. They always had some form of protectionism, and this protectionism is a very complex issue because it can come in the form of tariffs, it can come in the form of making it difficult to export to the U.S., and it can come in the form of subsidizing your own industry. In other words, to make my products more competitive, say, let's look at the grain market, Canada and the U.S. If we have totally free market, we have to have also an absence of subsidies of farmers. Because if I give my farmers subsidies, basically they can sell their products into your economy at lower costs. So this is a complex issue, and I wouldn't trust the U.S. to have completely free trade. Because in the U.S. you have so many special interest groups. They say, well, these people are being hurt, and so we need to do something for these people. These people this sector gets subsidies, and then those people get subsidies, and so forth and so on. So I think it's more just a bluff. In reality, I haven't seen the U.S. Since it became a nation, a sovereign state, without tariffs, and part of the Civil War was actually over the north. The East Coast wanted to impose tariffs to protect their industries, whereas the South, that was producing commodities, they didn't want tariffs because they wanted to export their commodities.
How is a trade agreement versus no trade agreement likely to affect Canada?
Well, I think between you and me, the U.S. is suicidal if they begin a trade war. In my opinion, the U.S. cannot win a trade war because the U.S., no matter what they will tell you, has greatly benefited from having a trade deficit. What they've done essentially, in the specific case of the U.S. with Canada, I'm not a trade negotiator, and so I don't know the specifics and exactly what it is about. But in the case of the U.S. with China, I have an idea. And the U.S. has essentially bought goods from China. And it's interesting that actually about 50% of the goods that the U.S. buys from China are made by multinationals, not only American companies, but also European companies, Japanese companies, South Korean, Taiwanese companies in China, and then shipped to the U.S. So it's not just China that, has this trade with the U.S. There's a lot of multinationals that have businesses in China that sell to the U.S. So what happens, China sells a pair of Adidas, Puma, or Nike shoes to the U.S. The price is approximately $10. Nike turns around and marks it up, and they do the marketing and so forth, and then the shoe gets sold in the shop for over $100. Yeah, tell me, please, who actually benefits from it the most? The Chinese, they get $10 altogether. The U.S. and the middleman and everybody gets $90. So, in my view, it would rather appear unfair to the Chinese workers that they get so little for doing all the work, and the others get so much for doing essentially nothing.
Is President Trump doing a better job than his predecessors?
That is a good question. It's a different style of government, to put it just diplomatically. In overall, I think Trump has done a good job at pushing back against regulation and too much legislation that strangles businesses. That's why you can also see that business optimism is relatively high and that hirings have picked up. The tax cuts are probably good, but I would say the corporate sector in America doesn't pay much tax anyway. It would have been better to cut taxes on the middle class. They pay actually high taxes. Many corporations in America, like Apple and so forth, they pay maybe 10% tax, no more. But the people employed by these companies, they pay a high tax, and these are the consumers. So I think that the tax cuts are okay. The other side of the tax cuts is, of course, we should have spending cuts. And that, Mr. Trump's policies have failed. In other words, the deficit is going up, and it will go up a lot. And there is a hidden deficit, which I touched upon before. namely the unfunded pension fund liabilities. That is a huge iceberg coming towards us, and it's going to hit one day in the sense that benefits will have to be cut. In other words, if the government promises a pension to you or a corporation, you may actually not get the full benefit, or somebody will have to pay larger contributions. But either way, the outcome will not be favorable. So we have what Trump has done, and Mr. Obama has done it before, and so has Mr. Bush. A lot of long-term problems have been postponed instead of solved. And I think the policies of Trump with his rising deficits are, as his trade policies, actually almost suicidal.
Is there a political revolution that's starting to take place around the world giving freedom to people?
I don't think the political revolution is to give freedom to people. I think it's a revolution to take freedom from people. On the one hand, you have the socialists and so forth, and surprisingly, a large number of young people, they want the government to do more and not less. In other words, the more the government does for you, the more it will demand from you. The ultimate is, of course, when the government controls everything, then they allocate stuff to you, like in a socialist republic, or under socialism, communism, you get a certain wage, and that wage is similar to other wages in the system, and you can buy a certain amount of goods and no more. So the government regulates your life in terms of where you will live, how you will live, and so forth and so on. And then there are people like myself who argue what we should do is reduce government and transfer back responsibility of what the government does to the individual. You can only have freedom if you assume responsibility. And if you don't have this personal responsibility, you will lose your freedom.
Could emerging market crises lead to a global stock market crash?
Not for now, because these emerging markets are not these emerging economies, Turkey, Argentina, Brazil, are not significant enough. But what they can do is obviously spread to other emerging economies. And what they can do is, if these emerging economies do not perform well, they can lead to disappointing corporate profits. And when disappointing corporate profits will hit what I perceive overpriced U.S. market, the market would be very vulnerable, yes.
Can China's central bank continue to print money without any consequences?
No, no central bank can print money without any consequences, including the Chinese. And obviously the currency has weakened somewhat. I don't think it will weaken much more. And because of their fiscal and monetary policies 2007, they created a huge asset bubble in real estate and in all kinds of questionable wealth products and borrowings by corporations. And as you know, the corporate sector in China went on a buying spree, largely built on leverage. I think a lot of these companies will go bust and be essentially eliminated. So there are consequences, and this would be my main concern about emerging economies. If the Chinese economy had a major problem, that would really lead to a colossal bust around the world, also in the commodity markets.
Could the trade war with the U.S. collapse China's economy?
That I don't think so. I rather take the view that the trade war with China would be more negative for the U.S. than for China, for the reason I just explained with the example of Nike. But different people have different views on the subject.
Have China's ghost cities been built on debt, and can it ever be repaid?
Well, I mean, you know, these are a lot of fake news by CNN and so forth. It's not that the country is littered with ghost cities. I admit, and I'm not trying to sell you China or to tell you how great China is, but the fact is there are not many ghost cities in China. Now, are there some projects that didn't do well and where essentially space was built and there isn't enough retail demand? That may be the case as well. There is overbuilding, but this is a feature of essentially every country that during the boom times, the buildings are established that then don't get completed because the developer went bust and so forth. But it's not something that is typical in China. That is the atypical way. And so I wouldn't pay too much attention. When CNN reports something, they make it look as if the whole country is going to go bust tomorrow, which isn't the case. But are some projects going to go bust? Yes, for sure.
Does China have a manageable debt bubble?
Again, experts have different views. I think the answer is somewhere they have a debt problem that needs to be addressed. It's probably not as, let's say, as serious a problem as in the case of countries that have not only this debt problem, but also trade and current account deficits. That China doesn't have. So that is a huge advantage.
What's happening to the real estate market in China?
Well, it's been actually surprisingly strong. But again, look, you're talking about a country that is in size essentially 4 times the size of the U.S. Now, if you ask me, what is happening to the real estate market in the U.S.? Well, I can tell you in the Hamptons, luxury properties and also elsewhere, luxury properties are not selling well because of high property taxes and maintenance costs and so forth. And other prices are going up in Seattle and San Francisco, but maybe now they're starting to go down. So if you ask, what is the real estate market? What is the real estate market in China? A country with 1.3 billion people. I mean, in some areas it's going up, and in some areas it's slowing down appreciation, and in some areas it's probably going down, but it hasn't collapsed yet.
People from mainland China have bought up real estate around the world, but with credit constricting, higher interest rates, and economic concerns in China, what are those foreign buyers likely to do with their properties?
Well, depends who it is. Some who are well financed and have paid cash for their properties overseas, they're not going to sell them. But if they have a problem at home, maybe they will sell them. We don't know how much credit they have at home, but some leveraged companies like HNA, they're selling assets, as you know.
Foreign buyers from China have bought a lot of high-end real estate in Vancouver. We hear that they're astute real estate investors. Are they really?
When the masses are buying, the mob is buying, then usually there is a lot of dumb money. But the motivation is different for a Chinese to buy real estate. And maybe someone in Vancouver thinks, well, they're paying very high prices. But for a Chinese, the prices may not be all that high, especially if they compare it to Hong Kong prices. And if they just have a desire to have some money outside the country. So the motivation may be different. But in general, I think they paid very high prices in Vancouver, and they're not going to make a lot of money. But then someone will say, well, but if the central bank continues to print money, eventually they'll go up. Yeah, maybe, that we'll have to ask the central bank.
China, of course, is a communist country. Have communist dictatorships ever had economics?
Who is a communist country?
China.
Well, I'd like to correct this statement.
Yeah.
China is ruled by a communist party that is still called the Communist Party. They have with communism less to do than the US and Canada with socialism. That I'd like to make as my final statement here.
So they're called the Communist Party, but they're not really communists, is what you're saying.
They have nothing to do with communism anymore, except it is a party that holds the power. It's a one-party system, the way Lee Kuan Yew was operating for years, the way Taiwan was operating, and successfully for years, the way Japan was structured successfully for years, and so forth. And let me tell you, in my opinion, there's not a great difference between having one corrupt party and two corrupt parties like in the US.
Mark, can you tell us about the Gloom, Boom, and Doom report and how people can find out more about it?
Well, they can go to the website gloomboomdoom.com, or they can send me an email at faberdoom@yahoo.com. But the website is the best. And there they can choose between the website report, which is a monthly publication, but it comes by email. And then we have the Gloom, Boom, and Doom report, which is a printed report, and it comes by mail.
Mark, thank you so much for being on This Week in Money.
Well, you're very welcome. Thank you very much.
My guest has
Bye-bye.
been Marc Faber, editor and publisher of the Gloom, Boom, and Doom report online at gloomboomdoom.com. He was speaking to us from Thailand. James Corbett reports from Japan, next on This Week in Money.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is James Corbett, publisher of the CorbettReport.com and editorial writer for the International Forecaster. He's speaking to us from Japan, where he has worked and lived since 2004. Welcome back to the show, James.
Glad to be back. Thanks for having me on.
The U.S.-China tariff war, how's that being taken, and is China planning any major retaliation for the latest round of tariffs slapped on by the U.S.?
Well, as people probably know, China can't retaliate with the same kind of firepower in the direct tit-for-tat tariff war, with Trump preparing $200 billion of further tariffs to take effect this Thursday if everything goes according to plan. China obviously just does not have that large an amount of goods being exported to the United States to really do a direct dollar-for-dollar tariff strike back. So the interesting part of this, of course, is that tariffs are essentially a tax on one's own citizens for buying things from another country. So the people who are going to be the most immediately and directly impacted by this are, of course, the poorest people in the United States, who will feel the effects of these tariffs as they affect all the items that they tend to buy at places like Walmart and other places where you can get cheap Chinese-made goods. Well, they won't be quite so cheap anymore. So they're going to be the first ones on the firing lines of this tariff war. And the Chinese consumers are shielded by the fact that, again, there aren't that many goods that China can actually slap these tariffs on. Certainly not goods that are made for the mass market. The types of goods that are made in America and sold in China include such things as yachts, riding crops, and false beards. So not exactly going to affect the average consumer in China. So interestingly, in the short term, at least the immediate impact is going to be some financial pain for some of the poorest people in the United States. Of course, this means that ultimately Chinese manufacturing is going to take a hit, and that contagion, or at least potential contagion, is starting to spread, and in some interesting ways. I think one thing that we're seeing right now is what is being called the contagion that is hitting emerging markets. As people might know, there's a rout going on in emerging markets. We've seen destabilization of Argentina, of Turkey, now India. The rupee is being hit again. Indonesia has hit one of its weakest points since the Asian financial crisis 2 decades ago. So there is definitely some sort of knock-on that's going on from the strengthening dollar and rising U.S. interest rates, global trade tensions, the tariff war. It is starting to have an effect on emerging markets. And now that is spreading to Asian stocks generally. Japanese stocks and Australian stocks are down, and Chinese and Hong Kong futures are down. So there are signs that this is starting to spread already, and it's going to be probably pretty tight when we start looking at the overall effects that this is going to have on Chinese manufacturing and the knock-on effects that'll have really around the world.
Would the Chinese government keep people employed just to make sure there isn't any unrest?
I think that would be one of the key strategies for the Chinese government at this point. If they are not actively planning and attempting to do that, then they are basically writing their own death sentence. Because as people know, the people generally will put up with large degrees of even outright tyranny, so long as there is bread on the table and a roof over their heads. But at the point at which that starts coming into question and the ability of the system to provide for the average person starts to fail, that's when you start to see revolutionary times. So that is always on the table, and I think something that's always on the forefront of the minds of the Chinese Communist Party planners. And I think that's why, obviously, the Chinese markets are so heavily manipulated, and people who do things like encouraging short selling are given a quiet talk behind the scenes, and if they continue, their activities are taken out back and never seen again. Those are the types of things that happen in Chinese markets. So it's, I think the government knows that they do need to keep that prop under the economy. Now, interestingly enough, one of the ways that that has been accomplished in the last several years has been through the spigot of easy money, credit creation, which led to all of these exotic financial instruments that Chinese savers were using instead of boring old bank accounts. They were investing in these wealth management products and other things like this that were promising 8, 9, 10% returns per annum. And a lot of the banks that were providing them, or the financial institutions that were providing them, have seen some very shaky things in the last few years, and especially now that the tariff war is shaping up. It looks like the spigot of easy credit money is drying up, and these great returns that people are being promised are not quite as lucrative or as appealing as the prospect of losing all of your savings to one of these exotic financial instruments in the blink of an eye. So it seems that actually Chinese savers are turning back to boring old bank accounts that offer a little bit more stability, even if it does offer less return. So it looks like Chinese savers are already starting to tighten their belts in anticipation of what's happening here.
What about personal debt in China? Is it at a high level like it is in Canada and Australia?
I don't have the figures on that, so I don't know that off the top of my head. But I think that the average consumer debt level is probably not the overriding concern for the economy as a whole. Again, I think the average consumer spending and average consumer debt is, in terms of sheer magnitude, of course, pales in comparison to the United States or Canada or the other more developed countries. That is becoming more important, though, of course, as we've talked about many times, as the Chinese government tries to steer the ship around towards a more consumer-based economy rather than an export-based economy. But I don't think they're there yet. So I don't think consumer debt is necessarily the big problem or the big question mark. It's more to do with the money that is now starting to flow into the hands of workers and going into these financial instruments that are questionable at best, and the possibility of a meltdown in that system of some sort of contagion spreading through the Chinese banking, or more accurately, shadow banking system, as we've seen the prospect of in recent years, is, I think, something that's very worrying. And that's why the Chinese government has always stepped in to provide liquidity whenever there's been a cash crunch or similar situations in the last few years. The question is, at what point, can the Chinese government, or will it even want to, take the training wheels off of that part of the economy in order to liberalize and start to on board with the global economy generally. That is going to be necessary if China wants to take a more prominent role in international economics, but I'm not sure they're able to do that at this point. So I think that's probably their overriding concern.
How's consumer confidence in Asia?
It really depends where you go. I think there's varying levels at varying places, and Japan has seen a bit of optimism in the last couple of quarters, thanks to some hopeful economic indicators that show that there has been a pickup in activity in the Japanese economy, and it is starting to filter down to average workers in terms of wage raises for the first time in a long time here. So there's a bit of optimism, for example, in Japan, but as I say, we're starting to see the collapse or the threatened collapse of Argentina and Turkey and India and other emerging markets starting to encroach on the Asian space more generally, so that it's really a question on a case-by-case basis how much exposure various places have to those emerging markets. Interestingly, one of the places in Asia with the most optimism at the moment is Thailand, which seems to be spared from this contagion that's spreading through the emerging markets on account of their large current account surplus and their cushy foreign exchange reserve cushion that they have in place, as well as low overall foreign investment in the country. It seems the Thai baht is holding up fairly well, so there's some optimism there. And just more generally speaking, we've talked about the demographic crunch coming in places like Japan, but other parts of Asia are seeing a boom in the younger generation, which portends well for the long-run economic outlook. So it depends, I suppose, in your demographic bracket and your geographical location and your industry and other things. But it's a mixed bag at the moment, but I think people are becoming more and more cautious as this tariff war starts to develop.
We'll have more with James Corbett right after the break.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp, RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with James Corbett. James, some recent numbers indicate that India could surpass China as the world's leading consumer of oil and other petroleum products. But if there's a slowdown in their economy, that won't happen, will it?
Well, that's always the calculation. Of course, the rising amount of oil being consumed, I suppose, could be a good economic indicator insofar as it means there's more activity going on in the economy, but then that has a negative effect when prices are ballooning as they are now. We've just hit flirting with the $75 a barrel level, which of course is quite considerably up from the depths of the oil slump of a few years ago. So this is not a good time to be overtaking anyone as the world's leader importer of oil. And as you say, now that India is facing its own rupee crisis, or at least the beginnings of what could be a rupee crisis, we're seeing the rupee falling. At any rate, that makes it even more of a crunch because, of course, again, these transactions are denominated in dollars, and if the rupee is falling against the dollar, it makes oil even more expensive. So this is not necessarily a good thing for India, and it has that effect of potentially dampening the economic boom or enlargement at any rate, which could, of course, overall tailor or hamper the economic growth that's happening in India generally. So it could be a vicious circle or the beginnings of one, and I think it's something that India has to be very cautious about, which is why, of course, as we were talking a few weeks ago, is one of the reasons why India has been trying to spearhead this oil buyers club as a way of trying to basically negotiate a better deal with the OPEC countries, because as people may or may not know, the OPEC organization imposes an Asian premium on countries like India and China and Japan and Korea, who are heavy oil importers and thus can be, I suppose, more easily squeezed for some extra dollars here and there. And that's exactly what OPEC does. So a few months ago, India was trying to refloat an idea that they've been floating for the last couple of decades now, which is this idea of trying to start an oil buyers club is basically a reverse cartel against the OPEC cartel to try to secure a better deal. I haven't heard any updates on that or how that's going, but it's no surprise that I think India is spearheading this as their oil imports start to rise.
Is there any move or pressure for other Asian nations to join China's currency and use the yuan as their currency?
The yuan really isn't in a position to become an international settlement or reserve currency at this point for a lot of different reasons. The institutional infrastructure surrounding the dollar as the world reserve currency is vast, and I think a lot more vast than a lot of people who aren't involved in these types of things would really recognize and understand. It's not just the fact that U.S. markets are broad enough and liquid enough to actually support a world reserve currency, but that it also revolves around every aspect of international settlement, even down to, of course, the SWIFT network, which is the international communication system that is used to settle bank transactions between countries. Well, even that, of course, is technically, theoretically, non-political, and it's a total neutral organization. But every time Uncle Sam, the U.S., wants them to delist Iran or Iranian banks, for example, SWIFT generally rolls over and does exactly that. So there's a lot of pressures that come from a lot of different things, including, of course, the petrodollar, to get people transacting in U.S. dollars. And at this point, the Chinese yuan really isn't a viable alternative to that. There is a push for a growing movement for bilateral trade deals to be settled in local currencies, not just on China's part, but Russia is also trying to promote that. We had the Russian, I believe, the finance minister coming out recently saying that it's time to get rid of the dollar as the world reserve settlement currency. But again, a lot of this is just talk until it really starts to happen in a significant way. One of the ways that could happen is the Chinese One Belt, One Road policy, this $1 trillion investment that they're doing, although it isn't really advertised as such, it seems like they're just throwing money at all these projects and everyone benefits and it's just free money from heaven. But as usual, no, of course it isn't free money from heaven. It's usually low interest loans or long-term loans with sweetheart deals to get people into them. But at some point, the piper comes calling. And various countries are finding that out. I believe it was Sri Lanka had a deep sea port that was financed by the Chinese government and with Chinese construction, basically constructing the port. And when they weren't able to make the payments on that port, the Chinese basically took it over. So we're starting to see that happening. And as the Chinese international investment increases, it is certainly possible that the yuan will become more of a kind of baseline currency for those types of transactions and interactions. But again, it's still a very long process. And I don't think the Chinese yuan is in a position to become anything like a world reserve currency anytime in the foreseeable future. If anything, it would be an intermediate step where the IMF special drawing rights or something like that would be used as the reserve, and China would just be one part of that basket.
We'll have more with James Corbett right after this.
Vadic Ventures Corp is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vadic's management has extensive potash exploration and development experience in Thailand. Vadic will have marketing advantage compared to Western producers. Drill program commences this spring. Vadic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vadicventures.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with James Corbett. James, is the Chinese government cracking down on cryptocurrency speculation?
Yes, as people might know, China has been leading the way on cracking down, actually, in the last few years, in an interesting fashion. So, of course, because of the heavy capital controls that Beijing tries to impose on China generally, obviously, they try to close up all the gaps in the ways that people can leak currency out of the country. And one of them, of course, would be Bitcoin and cryptocurrency generally. So China has been very careful about that. And there was obviously big news last year when they went around to all of the major exchanges in China and basically said, okay, now you guys are going to play by these rules if you're going to play at all, and shut down basically the exchanges while they started to figure out the new trading environment and what was and was not allowed. So there's been tight control over cryptocurrency exchange in China for a while, but interestingly, not blockchain development generally, which is still ongoing. China still leads the way in terms of mining of a lot of these cryptocurrencies, Bitcoin Cash, these other types of currencies. A lot of the mining takes place in China because of cheap electricity to run the servers. And that is an attractive position to be in as cryptocurrency generally takes more of a front stage in international settlement. I mean, obviously, still, it's a minuscule, tiny percentage point of overall trade that's going on. But as it continues to rise, one would assume that China would have some interest in maintaining its position as one of the large miners and as leading in terms of blockchain development in a number of different projects. So I think they're trying to have their cake and eat it too with this, trying to control cryptocurrency even as they try to control cryptocurrency, if you understand the double meaning that I'm implying there. But one of the things that results from this is the fact that China is itself, as I've talked about before, is actually developing its own quote-unquote cryptocurrency. There will be nothing crypto about it, really, but an electronic currency, at any rate, that might look or function something like what people think that cryptocurrency kind of looks and functions like, except for, all that pesky anonymity and all of that stuff. So I think they're trying to look to cash in on these technologies and what they can offer, while at the same time trying to control them and make sure that people can't actually get around the capital controls with them. So it's a very delicate line to walk, and China is attempting to walk it right now.
Is China trying to regulate or clamp down on online gaming because they believe it could lead to more problems for youth?
I haven't heard about... Well, I have heard various things about gaming in China and concerns about the youth, but I haven't heard about a clampdown or what that would entail specifically. I'm sure there are various initiatives that are going on. I have heard one that they're going to try to limit access to online gaming, but I think that's just part of an umbrella of basically control over internet and web activities generally that goes on in China. Of course, as people know, the Chinese internet is heavily controlled and surveilled behind the Great Firewall that the Chinese government has set up. And one of the aspects of that is controlling and policing content. We saw a crackdown last year on online content providers that were providing access to Hollywood films and things like that. Not, of course, from any sort of intellectual property concerns on the part of the Chinese government, but because of the potential cultural implications of youth being interested in all these Hollywood productions and things. I think there was some concern over that. So there was a clampdown at that time. And now I think that's leaking into the online gaming space. I don't know specifically about the various initiatives that the Chinese government are taking in this space, but I know they are at least looking into the problem.
Is intellectual property one of the issues that has the U.S. government slapping tariffs on China?
I think that is what motivates some of the people that are involved in the current administration and what they're doing right now. To a certain extent, I think it's a bit of a fig leaf, because I think the more underlying concern is just generally Chinese economic manufacturing power and its relative disparity when compared to U.S. manufacturing, and obviously the loss of jobs and manufacturing and all of that, which has resulted from all the outsourcing. I think the intellectual property is obviously of concern to the big Hollywood outlets and publishers and things like that, but probably not the key motivating factor behind the tariffs in particular.
How big is the development of artificial intelligence in Asia? I just saw a study by the McKinsey Global Institute that they believe AI could contribute an additional 1.2% to countries' GDP.
Yes, there is a lot of hype and things surrounding the question of artificial intelligence at this point, and I think a lot of it is hype, and they make up a lot of numbers to make headlines. So I wouldn't necessarily put too much stock in those types of headlines. But there are obviously, there is a lot of investment and a lot of development that's going on that front in Asia generally. As people know, obviously, Japan, quite famous for being at the forefront of robotics. China is seeking to position itself at the forefront of AI specifically, and this is part of a vision that the President for Life, Xi Jinping, has announced, I believe, by 2030 to have China the leader in AI specifically and in technology generally, which might sound fanciful to our ears in 2018, but it's starting to come to reality. And in fact, according to the world-renowned AI expert who founded Sinovation, Kai-Fu Lee, he says that China is basically overtaking and stepping in front of the U.S. on this issue specifically of AI, and he points to some of the development and investment that's already going on in China. So China is actively seeking to become the leader in this right now, and they're at least starting off towards that. But of course, the question is, what are they putting it to use for? And as people might know, there's the issue that is being raised recently in the Xinjiang province of China, where there's a large Uyghur Muslim population that are reportedly basically living in camps, having facial recognition technology combined with CCTV, and apps that are mandatory to put on any electronic devices to monitor the whatever's going on those devices. So a lot of this AI is being used for the development of a surveillance state infrastructure on the part of the Chinese government that currently, of course, is being wielded against Uyghur Muslims, but probably at some point will be wielded against the population more generally. And I think that's where we start to see the potential nightmare scenario, I suppose, developing from these AI technologies. What are they used for, and who is really employing them? As Putin, or at least someone in the Putin government, said in the last several months, whoever comes to the forefront of AI technology will essentially rule the world. Whoever wins this race will be the rulers of the world, because it will put whoever is the winner on such a higher footing, such a far forward in the race, the technology race, that it will basically be an unbridgeable gap. And again, I'm not sure to what extent that type of rhetoric is hype, but people in very important positions of power genuinely believe it. So I think we have to take it seriously.
James, thank you so much for chatting with us.
Thank you for having me on. Always a pleasure to be here.
My guest has been James Corbett, publisher of the CorbettReport.com. He was speaking to us from Japan. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Marc Faber, James Corbett, and thank you for listening. If you have any questions for the show or for our guests, you can send them to info@howstreet.com. Now stand by for company showcase updates from American Manganese CEO Larry Reaugh and Cypress Development's Don Mosher. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of How Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to the update, Larry.
Jim, it's always good to be back. I'm a little bit tired. I've been traveling since midnight, so it catches up with you. But I'm prepared to do a little talking here.
Larry, where were you off to before you came back to Vancouver?
We went down to Iowa, to Ames, Iowa. That's where the Ames labs are. We were invited down there by the Critical Materials Institute, which is part of the DOE. And so we went down. We certainly met a lot of people and discussed where we could fit in with our recycling technology. And there certainly was nobody there with an advanced technology like ours. But it wasn't a show and tell. It was more a meet and greet and to get to know the people. You know, there was, besides Ames, some of the other DOE labs was the Oak Ridge and the Ames laboratory itself, of course, Critical Materials Institute, and so it was a great eye-opener. Certainly, the attendance was top-notch with some of the best laboratories, with representatives there from the best laboratories in the United States, and we were happy to be there and happy to spread our stuff.
Larry, what kind of breakthroughs were you able to tell them about?
Well, certainly, it just goes to say that we're the only ones that have a patent pending that I know of. It's already been published. We're eventually going to have the patent. I think they recognize that. The technology that we're working on with hydrometallurgy is more advanced than anybody else out there. I'm sure if they had an advanced technology, they'd be filing patents on it, because it's going to be a very valuable technology. When you start talking about the breaking down of batteries, and there was lots of talk about that, even on the disassembly side. And if you break down those batteries, there's going to be billions and billions and billions of dollars worth of cathode material, regardless of the reduction in the cobalt arena. And people just have to remember, that there's still great value in the lithium itself and the nickel. And cobalt, even if it's down to 2 or 3% of the battery, is still got a great value. And when we first started looking at this technology and the numbers that we worked out, what the potential was, we were looking at much lower prices in all of these metals. And when I say much lower, the actual price of cobalt was $10,000 a ton. And, now it's still up there at $29,000, $30,000 a ton. And they're not making any more of it, and the surplus will be used up here the next few months. So we think we're in the right arena. We think we're in the right meeting down there. They can certainly help us, and we can help them. And I think it's going to be a win-win situation. And only too happy to have the company represented at that. That was actually the Critical Material Institute's the 5th year annual meeting. So that's saying something. There we were. There's group photographs made. We were in them, and we're getting recognition. Maybe we're not getting the recognition we need out of some of these funds yet, but that's coming. And I got to say that when we first announced this, I think that a lot of people thought if they can do it, we can do it, right? But they didn't have the background that we had, and that was our work on manganese, which was about 2 to 3 years before we were able to break through with the disruptive technology on that. And, of course, we found that chemistry that the manganese chemistry was, the other products in cathode material had the same chemistry. So it didn't take that long to work out a patent application on it. And I just want people to realize that, we have a long history of, there was an 80-year history before we got involved in manganese. So it's not just overnight. It's not something that we said, hey, we're going to do this, and we hired Cometco to bend over the bench and start developing a method of recycling the cathode materials. It was we already had 90% of the puzzle in our hands. So that's the difference between us and other companies that announce that they're going to use hydrometallurgy to recover batteries. We saw other methods of how they were recovering batteries down there, or they were working on it like bioleaching. And but we get 100%. Nobody has to go any further than that. And that patent should be issued pretty soon. I just thought it was germane that I should mention that we do have an advanced product, that people are not understanding it in the context of all the other noise that goes on in the background. And, I think we've run the right track, and we're, certainly are recognized in the right places. So that's a great thing.
Larry, where is American Manganese traded, and how can people contact you and get more information?
American Manganese is traded on the Toronto Venture Exchange under the symbol AMY. It's traded in the U.S. under the symbol AMYZF, and it's traded in Frankfurt, Germany under the symbol 2AM. Read all about the company at our website, AmericanManganeseInc.com. You can contact the company at 778-574-4444, or you can send me an email at LREAUGH@AMYMN.com.
Larry, thanks for the update.
You're welcome.
I've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on September 7th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Don Mosher, Cypress Development's corporate consultant. Welcome back to the show, Don.
Thanks for having me, Jim.
Cypress has just released its preliminary economic outlook. What's going on?
Well, it's an important document for the company. We've been talking about Cypress for months now, and what we've watched is Cypress move through from an exploration company discovering a large claystone deposit in Nevada, drilling out, we got 1.2 billion tons here of inferred material, but it doesn't mean anything other than you got a big chunk of dirt there until you start to put some numbers to it. So a PEA is a preliminary economic assessment where you're taking that resource and you're actually putting some numbers to it, where what's the value of the resource? How much money is going to be needed to put it into production? How long is it going to take to pay back that initial investment? What's your return on investment? And how long are you going to be in production there? So that's what we're looking at. Now, a lot of it can be conceptual. So it's the first step in the engineering program, if you want to call it that, as you move from the preliminary economic assessment to pre-feasibility to feasibility to construction.
And what kind of numbers can you tell us about?
Well, right now we've got a company with a market cap of $22 million Canadian that has now put out this preliminary economic assessment, and the net present value given to that piece of dirt in this engineering report says it's worth $1.45 billion US at an 8% discount rate. And if you build it, your internal rate of return on this is better than 30%, 32.7%. You're looking at being able to sell a ton of lithium carbonate for $13,000 a ton US, and we'll be able to produce it at under $4,000 a ton.
Impressive numbers. How are people going to find out more about it?
Pay attention to our news flow. Our next step on this is going to be moving into a pilot plant. One of the issues is there's 4 of these deposits that are really talked about out there now, and ours being the last one. You had back in Ora down in Sonora, Mexico. They have a refractory problem, but they claim they're moving into production. Global Geosciences is about 25 miles from us with Rhyolite Ridge. They're moving into feasibility. They're talking going into production. Lithium Americas is north of us, but still in Nevada. They've got Thacker Pass, and they're moving into feasibility and production. And now you've got us moving that direction. But right now, there is no production of lithium out of any claystone deposit anywhere in the world. So we're all going through the same process of having to demonstrate that we can take this dirt, if you want to call it that, and actually produce lithium out of it and make money. So our next step is going to be a pilot plant where we're going to start to refine our processing function on this, if you want to call it that.
Don, can you give us a bit of a background for Cypress? Where did it start? Who's behind it?
I guess I'm going to say that the most important person in the company is our CEO, Dr. Bill Willoughby. Bill came to the company because he was watching the drilling progress initially. He's an ex-Tech Cominco guy. He's a big company guy, and he was attracted by the size of the project. We had acquired the project a couple of years ago. We started drilling it maybe a year and a half ago. I've never seen a mining project move faster, and I've never seen a project that's moved to this level with the amount of money being spent. And I'm saying we've probably spent less than $1.5 million Canadian to drill out a deposit that's over 1 billion tons and now has a preliminary economic assessment done on it. Bill has put together a team of consultants, basically. So he's kept our G&A very tight by hiring people in the business that he's known for many years and trusts. And with this group of people, using them on a need-to-use basis and only paying them when he needs to use them, we've kept our G&A very low. And we'll continue to move this forward on a very small G&A. I mean, a lot of companies out there have bloated G&As. You'll be looking at companies spending $800,000 a year on salaries and office and all the rest of it. You're not going to see that with Cypress.
Where is Cypress traded?
Cypress trades on the Toronto Venture Exchange with the symbol CYP. Our website is cypressdevelopmentcorp.com, and you can stay up to date on all our news through that website.
Don, thanks for the update.
My pleasure, Jim.
I've been speaking with Don Mosher, Cypress Development's corporate consultant. I'm Jim Goddard. Our conversation took place on September 7th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Company Showcase is a production of Howe Street Media Incorporated.